What's going on, everybody? Michael Silva here. Tomorrow is Fed Day. Oh no. Is the market going to crash? Is it going to bounce? Well, in today's video, we're going to be prepping for a stock market bounce is what we're going to be looking at. I'm going to be showing you some indicators, and I'm also going to show the warning signs toward the end in the conclusion section. If you're new here, welcome to the show. You're watching the Stock Market Brief show. We use technical analysis, intramarket analysis to get a good idea as to where the market might be headed next. Hit that thumbs up if you haven't done so already, and subscribe to the channel if you like this type of stuff. We are, like I said, tomorrow it is Fed Day. We have the FOMC economic projections. We have the press conference. We'll see what takes place. Most likely what will happen is we're going to be getting a 75 basis point rate hike. There is an 82% probability of that happening. There is a small probability that we get a 100 basis point hike, but most likely we'll end up with a 75 basis point hike, which has been somewhat priced into the market, I would assume at this point. Now, if you look out to November, this will be interesting to watch how this develops going into after the press conference. But now they, just recently when I showed this, it looked like we can get a 75, then a 50, and a 50. But the likelihood now of 2 75 basis point rate hikes are increasing going into the November meeting. So September, 75 basis point hikes tomorrow, right? And then the following meeting might be another 75 basis points. There's a 57% probability of that happening as it stands now. So we'll see how the market depicts that moving forward. If you take a look at the 11 sectors that make up the S&P 500, everything was red on the day. NASDAQ fared the best overall. It was down only 0.95%. Everything else was down around 1%. What held the NASDAQ up? Well, it was Apple. It was pretty much the only thing green on the screen. Everything else was in the red. Now, a lot of people, this probably freaks a lot of people out. However, there are some indicators and signal charts that I want to go over now that are telling me, hey, this is not exactly where you'd want to start pressing short. And I'll get into more detail there. First and foremost, we'll look at the BP charts. This is using the bullish percent index, and we're applying an RSI, and this helps look for key pivots, right? When we look for RSIs overextended, right, boom, market goes down, right? If we go for, oversold conditions, we can see markets bounce. What we're seeing right now is the BP. So this is the NASDAQ bullish percent, NASDAQ composite bullish percent index. The RSI is at 28.84. Now, oversold can stay oversold for a while. So I want you to remember that as we go into the conclusion section later. A lot of people, and you should understand that typically crashes happen from oversold conditions. Okay, so however, right, so also bounces can happen. So we're oversold right here in the BPC-OPQ. The BP NDX, so the NASDAQ 100, this one is not quite yet into oversold conditions. It's at 33.54, but there is a subtle divergence that is building. You can see a low to a higher low, or we have a low to a lower low right there. The BP-SPX chart is at 25.63, so this is getting quite overextended to the downside, as you can see there on the screen. If you take a look at a couple of the sectors, also getting overextended to the downside, BP, this is the energy sector, right? We're getting a 28.66 reading. If you take a look at finance, financials, it's at 30.03, so it's moving into that overextended territory. And if you look at tech is putting in a pretty clear positive divergence right there. And these are the things that I like to look for, right, for turning points. You can see we had, a negative divergence here that we called out. Right over here. And you can see that's when actually the market started falling down. And then we saw stuff like this right over here where you saw positive divergences building prior, and you saw little bounces to the upside, okay? Well, we see that happening again, and it's at a 29.87 reading. So this right now is, to me, looking like an area where tech could most likely bounce. And if I took a look at this chart, which is measuring growth versus value, and we have the 10-period rate of change down here, this is a chart of the Qs. However, behind this chart that's invisible, you don't see it, it's actually measuring IWF over IWD, which is growth versus value. But you can see here when we cross down these red lines on the screen, when we cross the rate of change down through zero, right, from above positive to down through zero, we've seen some weakness in the market, as you can see right here, and so forth down. However, if we start crossing back up through zero, it could mark some strength, which we've seen most recently right here, where we saw the market rally up. Okay, so it looks like we can potentially start crossing up through zero here in the very near future, which could indicate that we could see some sort of a bounce as well. From a bullish perspective. If we keep on going down this list, there's all my indicators are kind of firing off like this right now. If you look at NYSE advanced decline, the RSI here is getting overextended to the downside. I marked those that's happened prior in blue. So the blue vertical lines going down the screen. You can see that when that has happened, when the RSI gets to that overextended area, we've seen bounces take place here in the broader market index. So is this gonna bounce again? We'll see. Another thing to pay attention to here is the NYSE advanced decline line. This is not the volume line. This is just looking at the issues. And I've been noticing that when we get these little subtle divergences, we've seen pops right into the upside, especially if you just take a look at the SPY. So if you have a high to a lower high, or a low to a higher low, and then you have a low to a lower low, we've seen this in a few cases where we get pops to the upside, and we have a subtle one building out right now as this, we're getting minus almost 2,500 issues, which is pretty overextended to the downside, which could represent a potential bounce area here too as well. On top of all of that, we look at smart money versus dumb money. So smart money is HYG, dumb money over here is the SPY. Why? Well, I don't know where that saying came from, but the bond market typically have more sophisticated traders in the bond market than you do the equity market. And you can see here, we marked out divergences prior where you get in the SPY a lower low, right? But then on the HYG, you get a higher low. And that's sometimes an indication that we can get, an early indication that we can get some sort of bounce. It happened here, right? And you can just see the divergences in the red. This is when we get a negative divergence, and that's marked, sell-offs in the SPY there too as well. So we do have a subtle divergence that's currently building, but it would be nicer to see confirmation, obviously, to the upside in HYG, which would really mean that we had to get back above 74.5. So if this kept on going down low and this kept on going up, that'd be a great indication right there. But we'll see here how that plays out. We're going to hop now into the index charts, and we're going to look at expected moves going into tomorrow. There's a lot of volatility packed in tomorrow's session. It looks like the SPY, we can go down to around 377.5. This is the implied volatility move to just above 390, which has been an area that has been quite important overall in the markets. And you can see that just by looking at prior trade in around that 390 level. You can see it's acted as resistance multiple times. It's been acting kind of like a magnet where price gets kind of sucked back into that 390. So if price does start bouncing up, where can we look for potential overhead resistance? It would be the weekly expected move, and then we also have obviously the CPI expected move, and we're trading below a declining 5-day moving average right now. So the bears have, the upper hand here. However, things are getting, like I said, overextended. We have subtle divergences that are building both in the RSI and also the price momentum oscillator there too as well. If we start getting hit to the downside, start looking at 377.50. If it comes down to 377.50, I would imagine we're going to tag the lower expected move too as well, which is just below that, right at around 375. If you take a look at the Qs, a very similar situation where we have these positive divergences building both in the price momentum oscillator and the RSI. We're looking at a upper expected move at 295, and then the weekly is just right around 300 on the low end, 282.50, 277.50 on the weekly expected move there. So a wide range going into tomorrow's trading session. It's very obvious here that we have a potential bear flag that's forming. Just be aware that it's such a binary event, right? We're assuming the probability, right, assumes that there's going to be a 75 basis point hike. Once that's out of the way, I'm assuming that the market's going to have to digest what Powell says at the conference or at the the meeting, and gets all these questions out of the way and so forth, and then we can really determine, the direction of where the market might go. You got to understand, even if the market were to bounce all the way up to the weekly expected move, where are we in the grand scheme of things? We're still putting in lower highs, right? And lower lows in the short term. And then if you even zoom out further onto the daily charts, yeah, it's the same thing. So, we're not out of the woods by any means. If you take a look at IWM, we're looking at 182 for the expected move all the way down to 174. That's plus or minus, right? So a wide range going into tomorrow's trading session. That's the expected move for the CPI. As far as the weekly expected move, 172 up to the downside. To the upside is 186. We're below that 5-day moving average there too as well. And you can see as price has been putting in lower lows, The price momentum oscillator is putting in a higher low, as well as the RSI. So things are looking like they're setting up for a bounce. Many indicators are saying, hey, probably not the greatest area to short. Unfortunately, it really depends on what Powell's going to be saying. And like I said, there's a couple warning signs here that I'll give you momentarily in the conclusion section. First and foremost, let's look at the zones. The zones right now on the midpoint on the S&P 500 is at 39.40. If you look at the SPY is down here. We'll go ahead and march. It's 393.38. So those are going to be some important levels to watch if we start getting that bounce. That lines up with some of those other areas of confluence that we mentioned just recently. And you can notice here, if you take a look at like the upside downside, you can just see that on the downside has been growing while the upside has really been kind of shrinking, right? So the upside, for example, the downside has been shrinking while the upside has been growing. I was looking at the VIX, but the upside on the VIX is 3.72 for the upper part of the zone, and then the lower part of the zone is at -14, right? So if it drops, obviously that can bring the markets up potentially. But you look at the downside on the S&P 500, it says right now 1.4% down to 5.76. Almost 6% upside. And then you look at things like, the 10-year yield. The 10-year yield has a potential 10% downside versus 2.77% upside. So you can see the dynamic is shifting here a little bit as we're getting overextended areas. Now, interesting thing, if you are in the Patreon group and you pay attention to these lower levels, the SPY lower level today was going into tomorrow, it's 378.93. But the SPY low of the day was the low price of the zone on yesterday's printed zones, which bounced perfectly onto the cent from those levels. Now let's wrap it up in the conclusion. So you understand, right? We're going into somewhat of a binary event. The market's going to have to digest it. It seems like consensus kind of says that the market's going to continue to the downside. A lot of my indicators saying, hey, this is where we need to be prepared for a bounce. If we get the bounce, I want to just reiterate that there is still, it's still in bearish context overall, right? The summation index is still pointing down. We have the parabolic SAR still above us. Okay. We do have, like I said, we have a, positive divergence right here, higher low, lower low right here on the NASDAQ composite. And then we have a dollar that looks almost like it can start bursting to the upside. And if that's the case, that's going to put pressure on the equity market. I would imagine it's going to continue that correlation, but it is consolidating and looking fairly strong right here. So if we do start backing off, that'll help out for a bounce. Okay. But these are all areas of contention where you got to look, right? We have higher highs, higher lows, and then we have lower highs and lower lows. So another couple of things to watch out for is the 10-year yield. 10-year yield hit another 52-week high right over here. You can see it's a little bit of a shooting star candle. RSI is getting a little frothy over here. So if this thing, as it's breaking out to another high, does this have further more upside, especially after the Fed meeting? And if so, obviously bonds are going to start getting hit even further, and this is also going to put pressure on growth stocks as well. And then on top of all of this, if we take a look at volatility index products, 27.16 was the close for the VIX, which is high. We have the NASDAQ volatility in the 30s, 33.3, and then we have Russell volatility in the 30s at 32.23. Okay, this is not the place to really get all fancy and do crazy things in the market. If you're intraday trading, be very tactical. Me personally, I've explained in my last video what it is that I was looking to do. I'm looking to potentially play short, I'm looking for new short setups if we get the bounce. I'll probably look for intraday longs if we are getting that bounce going into tomorrow. Just to play intraday. And then overall, just to get some exposure, I have about 30% long exposure. And I got into like energy, like XLE, I got into AMLP, I got into utilities, I got into some safer names. And it's with a smaller portion of my portfolio, just in case if we do get some sort of a bounce, I can play it intraday. And then I have a little bit of long exposure. But my shorts on right now, I pretty much covered everything for the most part. And that's all I got for you on today's episode. Everybody, hope it helped out. See